Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So we've got a little bit of a market problem here where it doesn't want to stay going up, and that makes it more difficult. So some of the uptrends are breaking, and we want to talk about that a little bit today, and then maybe a look at inside some of the things that are going on there. So I want to review some of the signals that have popped up, and then the Nasdaq 100. Just kind of go through some of those stocks, and we'll spend our time doing that today. Looking in, if you've got any questions about some of the stuff I showed today, a lot of it is for the members of gregschnell.com every week. I try to give them a sense of the market breadth and the health of the market, and hopefully that'll come out in today's presentation as well. But if you're interested, I've got a wildcard membership sale going on, and you can save $363 at gregschnell.com/sports, and the whole thing would be under $10 a week, so relatively affordable. Okay, let's jump into the charts. So one of the things I want to focus on here, we had this big giant uptrend going on for a while here, and this goes back to the beginning of the year, and you can see that the uptrend is breaking now for the first time. Now, we've had some other shorter uptrends break, one in April, May, but this is the long one, pretty meaningful break, and what we see is the Nasdaq advanced decline data is continuing to get worse. So pretty low levels, and one of the comparisons I was making before, see how much green there is in this box over here, and how little green there is in the box over here. We're getting to that point that there's just not enough rally momentum. And this is a 2-week moving average of the advanced decline line. And you can see, we had this big bullish thrust, and then we had periods where we were dipping down. And then we got to a period where we spent almost 2 months, July and August, with no real upside momentum, a brief couple of weeks, and then down for 2 weeks, and now up for barely a week and down again. So the market is clearly changing its strength, and we need to be aware of that just generally. Now, if we go down to some things like the bullish percent index are something I like to pay attention to. And what you see here is only 50% of the stocks are on a buy signal on the Nasdaq, and only 36% of them are above their 200-day moving average. That's the Nasdaq in general. When we go to the next chart, the Nasdaq 100, less than 50% are above their are on a buy signal, and only 59% of them are above their 200-day moving average. Now, if we zoom in here, what we see is that's the weakest this has been. This chart is an end of week, and I'm recording this on a Tuesday night, so it's a little early. But clearly, when we started to drop below my red line here, which is a level that I've picked over time to be a good place to just be careful around. We were at 69% last week, and now we're down, falling quite hard. And the issue is when we get here, there's lots of white space below the chart once we kind of fall down here. So we might get a brief dip where we just get a little kind of quick week down, or we might actually go into a 3 or 6 month correction, and we just don't know that ahead of time. So what we want to be is very careful with our capital here and make sure that if it does start to break down further, we've either got a plan to exit and then a plan to get back in, or how we're going to work around that. So here's the New York Composite. We're at 53% on the New York, and 59% of the stocks are above their 200-day moving average. So holding up in general better than the Nasdaq Composite, but still 53% is hardly a horse race higher. And then looking for the S&P 500, we're down in the 54% level. We were up here around 56, I think, to finish last week. That's the green line. And then my comfort level is when we're up above this bottom red line for sure. And if we're above 70, we're in a big bullish phase that you kind of want to be enjoying. And then when you get down into this level, now we're breaking down at 69%. I haven't moved this line down here, but we're right at the 70% level. And again, this is kind of the weakest we've been since mid last year, maybe October last year on the breakout. And then we're starting to break down. And again, we see this area where once this kind of big bull thrust ends, especially after being well up over the 90s, we can pull back for 2 or 3 months and surprise ourselves with weakness. Now, I'm not trying to predict how long. I'm just suggesting that it wouldn't be uncommon. We did it in 2004, we did it in 2007, 2010, 2011, 2015. Now, we still have the Fed on the gas pedal, which is different. That happened in 2010, 11, 12, where the Fed stayed on the gas pedal for a long, long time. So I don't want to directly correlate history. I just want to point out that it's not uncommon to go from a really, I'll call it, strong period of an uptrend to actually pulling way back. And, if we drew this long bull market trend line out, I don't know what it would come in at, let's say 3,700 or something. That's meaningful. That would be a big pullback and we'd all be shocked about it. I'm not suggesting for a minute we get all the way back down there. I'm looking more around the 30-week or the 40-week moving average on the indexes. So if we go to just to the S&P 500, here it is on a daily chart, and we had a relatively large volume on Tuesday, but you can see this was the uptrend line that had the most touches. Now we could run one off the ultimate low, or we could run one off this low. But this one had a lot of touches, the last 3 or 4 being, I'll call it, right on the trend line. So to me, that makes the trend line important. Now that's starting to break. We broke through it. We rallied back up to the 50-day, couldn't get above it, and are now starting to break down. So the 200-day is down here. The 150-day moving average, if you wanted to do it that way, let's just move from our 50 and we'll just put in 150 to make this quick. So, that's going to give us a number of 42.36 and a number of 41.27. What would make 4,100 important is if we just draw a line through here around 4,100. That's kind of the support level. Just make sure that line is flat. That's kind of the support level that we found back in here. So I'm not against using that line. It looks okay to me. I think the bigger issue is these moving averages, I think, will come more into play and probably be more relevant. Normally when you come down and you get to your 150 or 200-day moving average, you get a pretty good bounce off that. We didn't when COVID started, but typically they're a place to look for support. Lots of institutional investors are looking for some sort of a pullback to that level. So that's kind of more in my expectation level. If we go to the Nasdaq, this is a weekly chart, so we would just use the 30-week or the 40-week moving average. Just put that on here. So I'm going to select 30 and then just add some color. I'm going to make that one's green, so this will be a solid line. My typing. And this one will be blue. So the 30-week here coming in. So if we had another move down like we've had already this week, sometime over the next week or two, that would get us down to the moving averages. And you can see we've bounced off the 150 or the 30-week moving average a few times already in this big bull market. So not a bad place to look. And then if we just look broadly, around the 150 or the 200-day, that would be the 30-week or the 40-week. That's a good place to expect support to show up. So I think you want to start buying your long ideas as we get down towards those levels. That would probably be a place for me to look, at least to try and get long and see if we can do that. Momentum is rolling over quite a bit here. We're actually in a bit of a downtrend. We're making a series of lower highs. This hasn't made a lower low yet. When it gets below 2%, I start to get a little more concerned. But I think what happens is we'll get down around that 2% just as we get down to these moving averages and probably make a nice bounce out of there. Okay, so that's the bigger picture right now. I see that being a problem. Now, if we go and look at what happened today, just in the sectors, we can just quickly roll through these here. But the XLY tried to break out on Monday and then failed, breakout now. High volume, so some people were really letting it go. And then here's communications breaking the 100 period moving average, so that's not so great. Here's XLK heading down towards it. It's now broken that long uptrend line. I use a Keltner band to kind of give it an area to bounce off of as opposed to one line in the sand or whatever. So as long as it's roughly supported by that Keltner band, I'm pretty interested, and if it can get back above it, that gets me more interested. But right now we've been going sideways for a while here, and all of a sudden we're making new closing lows. So this isn't exactly bullish now. PPO moving below zero, that's not really a great recipe. And then the other thing I would just say is your relative strength. You want to see which groups continue to hold up. Well, this hasn't broken down meaningfully yet. It is definitely turning down. Looking in on XLI, it's clearly breaking lower. That doesn't look very bullish. XLB, materials aren't hitting their lows yet, but they definitely turned down. They were down 1%. I want to continue to watch materials because when we build wind farms and solar farms, we need steel. And we need copper, we need aluminum. All of those things are pretty important. And if this is going to start turning higher, I would think some of those areas of the market would probably be helping us with that. Our energy markets are moving higher, and again, we're testing prior highs here, so let's not get too bearish. But even if it pulled back down to where we were for the breakout, I still expect it to go higher. You can see that even today, on the Tuesday, we had massive volume here where 65 million shares traded on an XLE energy, which nobody's typically bullish on. So this is moving up quite nicely. Now it is a bit of a reversal bar at the top as we test the high. I just think as crude has to work its way through its prior high, this will take some jostling. But that might be a position or an area to get interested in XLE if you like that for the long side. I really do. Here's the consumer staples, and it's clearly breaking below its 100-day moving average. Looking at XLV, it's plummeting below its 100-period moving average. So all of these are making big moves down. There's the XLU, same thing, XLF. I actually expect XLF to hold up. Now, again, it's testing prior highs here, but if it comes down and the market's starting to correct and it gets down to that 200-day or 150-day moving average overall on the markets, I'm probably looking to try and find a place to get long on some of these financial names. Real estate breaking below the 100-day moving average. So you can just see, in general, these markets, a lot of the sectors are actually starting to break down hard. And with the exception of XLE and XLF, they're the ones that are closest to their most recent highs. Okay, so I've got the Nasdaq 100 here, and I've just set it up based on Tuesday's trading. And what you can see here is only 5 stocks were positive out of 100. That's quite frankly not a very good level. And if we just said 1 week, we're still not in that much trouble. We've got some big names moving down hard, like I think Moderna moving down hard is a surprise. Peloton Interactive, that one's been weak for a while. If we just go look at the chart, it's not really strong. And I think we covered off these names way back in February when they were starting to look toppy, and just said, these, as the back to work improves, it's going to be harder for Peloton and Zoom and some of those names, and they're still the ones that are breaking down the hardest right now. So we're seeing broad hitting across that. Now, the one area that I think is more important is if we look at something like a Microsoft and just go in on the chart, whether we just use a daily chart or whatever, but I want to point out here, maybe that's probably enough time. I just want to annotate this chart and point out that when you look, here's the big uptrend for Microsoft. So if it got down to that level, I'm expecting buyers to show up for work around 270. But it's quite clear that we've broken this trend on Microsoft. We've also broken the relative strength uptrend. Now, how bearish can you get on a company that's doing a massive buyback? Not very bearish, because when they're going to start putting $60 billion to work to buy the stock back, it's probably not going a lot lower. Anyway, that level of 270 looks like an interesting place to watch for Microsoft to hold. Now, just going back to the list here, I'm just going to go look for Google. Oh, didn't go far enough back. This chart, I think, is more meaningful problem, and the reason I say that is this is the first time this trend line has really broken since we actually started the uptrend. And if I was to just expand this one all the way out to include the March lows, you'd see this was coming basically right off that March low. This is the first breach from that period, and I guess I'm just trying to do a best fit here across the lows. Is that the way I should line it up, or should I line it up like that? Let me just look at one thing here. Yeah, it is log scale. Okay. Anyway, to me, it looks like it's breaking. So that's an important one. I really don't expect that. And then Facebook, this one had an uptrend that's pretty clear, and I think we can all agree it's probably broken just by drawing that trend line down here. So this one's broken. So when you go think of those large cap names, that's a meaningful break. Now, the other one is Apple, obviously. And looking in on the Apple chart, it's got similar characteristics. We'll just widen this out, annotate, going whatever if we use the exact March low. I think what's more important is this most recent trend. And so if we wanted to pull this all the way down here to this endpoint, whatever, you've got this slope, and we're clearly breaking out of that. We're now making multi-month lows, 3-month lows on Apple. So it's been moving up, but again, it was 137 back in September, and it's 140 now. So the $3 isn't that big of a move on something as big as Apple. Now, again, their growth has been slowed dramatically, so it's not really the big growth name that we used to associate it with. Looking at other names like Tesla has been nice. I'm going to just look at Netflix because I haven't looked at it before the show. I didn't get it there. And Netflix, okay. And so Netflix has actually been performing good lately, and it just recently broke out to new highs. My main issue on Netflix is this sideways channel. Are we going to break out of it? And we tried, obviously, but so far it looks like a failed breakout. Or is this just a consolidation before we get ready to move higher? I don't really know either way, but to me it's still consolidating, and so if it was going to start to turn higher, that doesn't look too bad to me. Now, we've just walked through the top, some of the top names in the market. Let's go back and look for Tesla. And again, what you're trying to do by doing this is just go find the big names and just see how their stocks are behaving. So Tesla's got this move that it made off the lows. I actually don't think this end of the price chart fits that good. Probably better with that sort of a slope on it. Now, nothing wrong with that slope. That's still plenty aggressive. We were 350 last summer, and then this summer we're sitting around $795, $800. So Tesla has just broken out, right? And I think the real question here is, can it hold that breakout? And if not, then we probably want to be aware that we're in a failed breakout situation, and they can move a lot more to the downside. Now, Tesla has held its 200-day moving average pretty well. A couple of brief, multi-period days below the 200, but not many. And we're sitting right at, call it 800, and a move down to 700 wouldn't be too horrific. So kind of looking at that broad market, some of the big names like Google and Microsoft have cracked. Apple is only up $3 in a year. When we go look at Amazon, that chart has been sideways for a long time, hasn't been able to break out. Netflix, same thing. Here's Tesla, and again, it hasn't done any better. So trying to get comfortable that these big names are are really ready to move. Now let's go look for Amazon in here. So again, this is just a list of the top Nasdaq 100 stocks. And again, looking at this chart, there is no upside here so far. It did try to break out a few weeks ago, a couple months ago, and then that failed to hold. And now we're back inside this wide channel. 2,900 to 3,500, that's pretty wide. I think the bigger issue is, are we going to start to lose support of the last two lows? We're sitting right on the 200-day moving average again, and waiting to see if this can break out. So I like the look on the chart. I'm not that negative on Amazon. I still think there's lots of upside here, but clearly investors have not been making any money holding that stock for this year, and you had to be in, Cloudflare or something like that to really make a lot of money. Now let's go look for CRM. Oops. Well, that's my mistake. I thought that was in the Nasdaq 100. So when I look at Costco, the big thing I see here is this chart was one of the stronger ones, and it started to break down a couple of weeks ago. Now this is off the March 2021 low, not the March 20 low. So this chart still looks good, but again, we're starting to lose some relative strength here where the chart is breaking an uptrend in relative strength. So that's in purple. It hasn't broken it meaningfully yet, so I'm not too concerned. But what I want to make sure of is if all of a sudden these stocks start to underperform like they did in here, that was a pretty good clue that you were in for a quiet period in the stock. And it pulled all the way down into that March low. And I think some of the market buzz we did at the time might have been a market buzz or a pitch on StockCharts TV. And what we covered off there was just that stock, Lululemon, and another one looked like they were all making their lows. And sure enough, that was a good place to get long. Now we sit at the opposite end of the scale where we're literally trying to break out. Top side, we've had a double top here, and now we're breaking down instead. So not the look we want on these names, and I think it's just important to be aware. Now, if Costco could pull all the way down to the 390 level, that's a pretty good buying opportunity as opposed to buying it up here at 470. So not predicting how far it will go, just suggesting that if the indexes are going to get down to their 200-day, it wouldn't be uncommon for some of these bigger names to do the same. So how do we get our strength or our bearings while the market is pulling back? One thing to keep an eye on as we go lower is to go to the charts and tools area and go to the predefined scans right down in here, and just keep track of what is still making new 52-week highs. So on the Nasdaq, if we just want to look by industry group or whatever, so banks breaking out to new highs today, that's pretty bullish. Entertainment, only one or two exploration companies, which is interesting, but we are looking at the Nasdaq, not the NYSE, where more of them are listed. But I've been noticing that the gambling stocks have been breaking out lately. So here's Caesars, and that one's been pushing up to new highs. Hotels have started to break out. Airlines had a big bounce last week. I don't know if they held up at all today. Down slightly right at the 200-day moving average. That's a little awkward. You can just see it's been resistance. We bounce back up to it and we fail. Really need to make sure that that keeps going. And if it can't keep going, you just want to let somebody else own it below the 200. So I want to just kind of keep track of what stocks are really strong out there. Whoops. And one of the ways to do that is to just use the stocks hitting new 52-week highs. So if we go to the New York Stock Exchange and look by industry group, we're going to find here's exploration and production energy. Lots of those names are starting to rack up. And again, if you're hitting new highs, you're not in a bear market, right? So we're seeing big pressure to the upside on the energy sector. I keep looking over at tech, at some of the I'll call it clean tech names, and I'll just show you how I do this. I have a chart list. I just did a clean tech newsletter for subscribers today about the clean tech stocks. But if you go look at view all, there wasn't very many that had a good day today. It was pretty rough. Lots of these names got hit hard, and if we flipped the list over, about 10 were positive out of 300 or 400. So it was a pretty rough day everywhere. The one thing I did notice, though, if you look at Ford, Daimler, General Electric, BMW, all held up positive on a big down day. So that relative strength has to be noticed. Here's General Motors holding up, Honda Corp, Toyota Motors. So out of this list of 300 stocks, you have a massive number of the automakers holding up really well here. So as we come out of these lows, if it's early October, end of October, whatever, let's just say it's mid-October. If we have options expiration day on October 15th, and then we're looking around October 16th or 18th or 19th to get long in the market after options expiration, just to pick some examples, that's a real interesting play when these stocks are holding up well on a big sell-off day and they hardly move down. So that's the kind of thing that I'm looking for, is what's showing relative strength. Now, Teck Resources is a big copper company. They also have metallurgical coal, cobalt, zinc for batteries, all kinds of good stuff in the metal and resources world. So that stock held up relatively well. Tesla held up well. I think it's that kind of thing, comparing what actually worked here rather than what sold off hard. And one of the things that I expect is, with the energy sector doing so well, oil and gas energy sector doing so well, I would expect that starts to put pressure on these alternative energy sources to really get going again, and that should push up the copper stocks and the minerals associated with clean energy. So here is the Clean Energy Fund, and this hasn't done anything. It's been drifting lower. You know, keep expecting it to get better. ARK-K hasn't done any better either. You know, they just keep rolling over. So what we're seeing here is a broad area that the growth names are starting to get sold off more and more. I don't like the big trend lines on Google and Microsoft breaking, but I do want to start paying attention to banks and financials, insurance companies. As yields try to move higher, that would help their sector. And then when we get involved with the energy stocks, you know, I saw an article today where hydropower on the west side of the country is down 14% in terms of supply. We still need that hydro, or we still need that power, so we got to get it from somewhere. So are we going to suddenly be able to ramp up wind and solar by 14%? Probably not. So that pushing us back into coal, natural gas, and oil to try and bridge that gap. And the people who suffer most in high energy prices are low income. So as winter comes on, we need to make sure we're aware of the change. And to me, it looks like the energy sector is well set up to rock here. So again, Nasdaq's breaking down a little bit. Let's look for support around the 150 or 200-day moving average. Don't be afraid to start building your watch list based on what's holding up on these big down days. That can give us some pretty good clues. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page, as well as StockCharts On Demand. Thanks again. Head over to my website, gregschnell.com/sports, if you're interested in a subscription there. Thank you. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.